Hello, you're welcome to Fininvest Niger. My name is Tom Princeville. I'm a certified securities and investment specialist, and I've been investing for the past 20 years. In the course of this video, I want to highlight the best performing ETFs, exchange traded funds in the Nigerian markets. Before then, I want to talk about 10 key features of exchange traded funds. This particular fund is part of a vast universe of other asset classes. We have stocks, popularly known as shares or equities. We have bonds, as well as mutual funds, index funds, private equity funds, venture capital funds, commodities, and even fine arts. These are all, you know, asset classes you could choose to invest in. But I want to concentrate on exchange traded funds, ETFs. Before I go to the figures on the board here, let me highlight the key features, the characteristics of typical exchange traded funds. Number one thing is diversification. ETFs hold a bundle of a basket of securities, allowing investors to gain exposure to many assets, through a single investment. If you buy an ETF, that ETF will hold different assets in its portfolio, and by so doing, you are exposed to different assets, in your overall investment. Number two is exchange traded. ETFs are bought and sold on stock exchanges, like the way you buy and sell equities or stocks in the market. Just go to the stock exchange and then you buy an ETF the way you would generally buy or sell stocks in the market. Number three is a low cost structure. ETFs, have most of them have lower cost structure because of their lower expense ratio compared to mutual funds, because they are passively managed. They're not actively managed like mutual funds. So the cost implication is generally or relatively low compared to other asset classes like maybe bond funds or mutual funds, as the case may be. Number four is transparency. When it comes to transparency, ETF holdings are usually disclosed, allowing investors to see precisely what they own. If you go to the ETF sites and you open the individual portfolio, you discover that the instruments or the securities they hold are presented there for investors to see. They are not hidden at all. Number five is liquidity. When we talk about liquidity, it's very, very important that an instrument should be highly liquid. In other words, you can very easily buy and sell, significant portion of your holding without affecting the market price. Unlike maybe land banking, it's difficult to sell land easily. It might take weeks or months to dispose of your real estate. But when it comes to ETF, walk into the markets and then very easily you can sell or buy an ETF, as the case may be. Number six is passive management. Many ETFs, just like index funds, they are passively managed. All right, they are not actively managed like mutual funds or other equity instruments. No, they are passively managed. Number seven is price flexibility. So ETF can be traded intraday at a real-time price, unlike mutual funds and that are priced daily. Mutual funds are priced daily. They don't fluctuate, but ETFs fluctuate like stocks. The price in the morning may vary from the price in the afternoon. So you can trade it intraday, but you can't trade mutual funds intraday. You can't do intraday trading with mutual funds. Number seven is price flexibility. ETFs can be traded they have uh, that particular flexibility when it comes to pricing. Unlike what's obtainable in mutual funds, they come with different price. Number 8 is tax efficiency. So ETF generally generates lower or fewer capital gain tax. Although when we come to the figures, you discover that some of them, a particular one here, doubled in price. The implication here is that the ETF at the end of the year will give you a portion of the capital gain as your payout, as your kind of dividends. And so it attracts a minimal level of tax, unlike you selling the entire investment that will attract a larger amount in capital gain. But in a case where the ETF gives you base dividend at the end of the year, you discover that the tax implication is generally minimal. It's quite minimal. Number 9 is wide market access. ETF provides a kind of exposure to stocks. You can buy stocks, you can buy commodities, you can buy across sectors and even regions. When you buy into an ETF, so it gives you that particular wide access to instruments in the markets. You are exposed to different stocks as well as on different bonds, depending on the kind of ETF you are buying. Because you have stock ETF, you have bond ETFs, and you probably have ETF that deals in different sectors of the market. So when you buy these ETFs, you have exposure to different sectors or exposure to different asset classes, as the case may be. Number 10 is lower investment barrier. So when it comes to buying ETF, there's virtually no barrier. There's virtually no, a barrier to entry. With a little capital, as the case may be, you can buy into an ETF. They're not very, very expensive, and it's convenient for a beginner to walk into the markets, register, and then you buy whichever ETF you want to buy. There's no class demarcation. It's very, very easy. It's very simple for anyone to buy if you are interested. Now, I want to talk about the different ETFs here in the market, in the Nigerian market, and their individual performance. So I want to highlight the best 5 ETFs for the past year, for the year 2025. These are the best we've gotten so far when it comes to returns. Number 1 here is BCG ETFs. BCG ETFs, and this ETF made a return of 120%, 120.95%. In other words, it has doubled in price, as you could see on the board here, 120.95%. So in practical terms, if you had invested ₦1 million in this ETF, you will have 2.121 million naira approximately. You see, so your ₦1 million will double in the process had it been invested in the VCG ETF. The other one is Lotus Halal ETF. The Lotus Halal ETF equally did very well. The fund, had a return of 80.78%, over the stipulated period. Had it been invested ₦1 million in this ETF, you have about 1.8 million naira, in returns. So the ETF did quite well. The next one is the BG30 ETF. This particular ETF holds the 30 most capitalized stocks in the markets. So if you buy into this, you are buying into the 30 most capitalized stocks in the markets, and this particular ETF delivered 54.52% in the course of the year. In other words, if you had invested ₦1 million here, that will give you 1.545 million naira, you have a gain of over 500,000 naira. Then the other one is new gold ETF. The new gold ETF, made a return of 50%. 50%. So an investment of ₦1 million in this ETF will give you 500,000 naira in profit. You have 1.5 million naira. And then lastly, you have the SIAML ETF 40. This particular ETF invests in the 40 most capitalized stocks in the Nigerian Stock Exchange. And the ETF delivered 39.60%. In other words, had you invested ₦1 million in this ETF, that will yield approximately 1.4 million or 1.396 million naira. So that's it about the performance of the ETFs in the market so far. Please subscribe to this channel if you've not done that. Like this video and share this to people around you. My target is to be able to reach out to 1 million Nigerians with the investment message. And why am I so keen about reaching out to this vast number of people? Is because in the Nigerian markets here, in the Nigerian context here, less than 4% of the adult population have investments in the Nigerian Stock Exchange. Unlike in the US there, over 40% of the adult population are invested. They have investment in the stock market. Imagine over 40% in the US, and then in a Nigerian context here, we have less than 4% because of kind of lack of awareness. So I want to put awareness and then reach out to many people so they can come to fully understand the wealth creation opportunities that are kind of locked up in our markets here in Nigeria. For help in this regard, subscribe, and then hopefully I will meet the targets I've set for myself.